There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
So in this Insights, we're basically going to be going over what we are looking for as far as current market moves, some tips as far as how to use Zeus, especially for beginners, and then also just some forecasts to really show you how to really plan the next few days in the market going into next week. So I'm really excited that I can do this with y'all, because when I was brand new, I didn't have someone that could really explain the markets or had any sort of tools to help people out. So, let's get right into it. All right, let that load. So the first thing I want to start off with is just the market. This week in the markets has been a pretty easy going week, just in general, because it's the second full week of the month, and usually the second full week is almost like a break week, kind of like hump day for the financial markets. So there's not a whole lot going on, but you do have some key things to keep in mind, but nowhere near the normal amount. Like if we go to next week in the markets, like look at the difference. You'll see a difference. So you have all these red folder news, got a lot of Australian, Canadian news versus last week in the markets. It's a little bit lighter of a week. Less news events, and mostly, if you pay attention, most of these news events are just speaking engagements. Nothing hardly is any reports. So you have maybe 8 major reports, 7 reports, and the rest is just speaking. So big difference. Let's go back into the following week. You have more reports coming out. So all of these, you see, just reports. There's no speaking. Like maybe this one right here is the only speaking one. All of this reports. So you see, there's a big difference in news from week 2 to week 3. What does that mean for you? One, on lighter news weeks, you can be a little bit more confident in just your technical analysis. Even in heavier news weeks, technical analysis is important. But just for, make sure that, okay, perfect. Just for the, lost my train of thought just now. So basically, when you have lighter news, you can just trade, long story short. So I want to bring that up with you guys. Let's kind of cipher through the markets, and then we're going to jump to Zeus. and see what happened over the last week or so. Well, not week or so, the last few days. But we had a great, beautiful New York session. Hopefully, you guys traded it. Well, this was a move here that I took. Market got down into this area here, took it. It didn't fully realize its trade, but like I said, if you could have 50 pips, and we had a trade like this earlier this week. If you could have a failed trade that goes 50 pips in profit, like there's no complaining. There's no complaining whatsoever. Like you're failing in profit. That's the best situation you could hope for as a trader. But all in all, the market gave you some pips, and then started to reverse on you. So that's why the risk management aspect of things is very important. Last session we focused a lot on really more so Ethereum. I have to go back to the weekly to show y'all. So I said here that this area where it's at is a very key area for one institutional buying sweet zone. And the reason we have this highlighted, if you know my strategy, we identify structure, we identify trend, then we identify high volatility areas or high reaction areas where the market could react in our favor when reached. So, one, this is a weekly candle, so it's not going to happen as soon as it touches this area. But give it to the end of the week, and let's see what happens. We see if we start to give some rejection because we got 2 more trading days left, about 5 more sessions. Yeah, roughly about 5 sessions left in the week, not counting this current one. And a lot can happen. It can give us a good indication, especially if we start to get some wicks, something like this that happened earlier to close out the week. So the biggest thing that I would be paying attention to is this Ethereum chart, because I really like where things are at here. But continuing on, let's go back to our regular intraday. Let's kind of look at things that we didn't really look at the other day. So hopefully you guys caught this. I wasn't able to really identify this in the last session because when we were in session, I believe the market was around this area here. And it wasn't much to indicate if it was going to break out of this zone and create a nice lower high, like a true lower high. Look at a couple things. I want to point out a couple of things. One, you have imbalance right in this area. That's not the only area. You also have it here, basically from this point here. So you have 2 levels of imbalance. 2 levels of imbalance. But look at when you mark up one, your Fibonacci to it, look what lines up. The second one more so lines up with the 61 to 71 zone. So you got the 71 is roughly 50% of this imbalance, because remember on imbalance we like to look at the 50% mark. The 71 is close to that level. It actually did reach that 50% of this imbalance. So you have confluence in the market, especially, when it comes to institutional moves. I love playing institutional moves around news events. And today, this was 8 a.m. for me. Let me see if anything happened today. And what pair is this? Australian, Canadian. So, all right, so we didn't. Let me see if there was a low impact news that had more of an effect. Settings, not that. Sometimes I know how to do it, sometimes I do not. There we go. All right, so this is just New York session open. It wasn't any particular news events. But in the markets, you want to be able to understand what's going on. And it's just simple. We follow three things. We look for trend, which is basically if the market is making higher highs or higher lows. That was the worst way to do it. Let's do it without the chart. So higher highs and higher lows. That's an uptrend. Downtrend is making lower lows and lower highs. That's trend. Structure are the points in the market that have commonality. So you have reactions from that point. And then structure is also the highs, the individual highs and the lows. So you want, if you're buying, you want to buy at a low, but that low be higher than the last low. And then momentum, seeing that there's movement in the market. So momentum, say you're looking at this low right here, and you're waiting for the market to kind of turn in your favor. Show you a positive indicator that the market is going that way. So I'm going to go to the 30-minute. So like for example, and it doesn't. Sometimes you have to go like 15 or 30 minutes to really see it on this part when it comes to momentum. Going back to what we were talking about here with this trade from this morning, the market came into the area that we liked, came here, gave you a wick off of that area immediately, and then it gave you a nice solid red candle. That is what you would call that momentum shift. You don't need much. You just need to see that the market is recognized this zone. That's all you need. You don't need it to come way down here to say, oh, the market's in momentum. Well, you lost most of the momentum waiting that long. You just need to see that the market respects this zone and is playing off of it. Once you see that, you can play into it and notice how when you understand where the market is going, you see, say if you place a trade right here at the close of a candle, you didn't have any drawdown. Now it's not always going to be the case, but you'll see that more times than you expect. You'll have trades where they're very clean if you follow the rules. And that's the biggest thing when it comes to trading, it's just following the rules. It's not necessarily having a magical strategy. It's just knowing what your strategy is, and the strategy just has to make sense. But the most important thing is you follow your rules. So let's go to, let me see, make sure anybody doesn't have any questions. Okay. All right, so on to the next part of things, or the next more so pair. Let's see if we can find, because the Australian pairs they most for the most part did similar things. And you'll see that from time to time. Like you see how the Australian pairs they all have that pop up and rejection around the same time. You'll see that. Let's go to a different currency set. Let's do the Canadians. So actually, let's go into these are the yen pairs. So with the yens in particular, the yens usually have like moments where they kind of just, I call it kind of streak down, slowly slide down. Like yen, the New Zealand dollar, they have that characteristic to kind of just, just kind of slither in one direction. Not a lot of huge pop ups and downs. Like comparison to like United States dollar pairs or Great British pound pairs, which you can have those big like momentum shifts where you have these big candles all in succession when the market wants to move. But going into Swiss franc New Zealand, like you can see, I mean Swiss franc Japanese yen, you can see that obviously it's in a downtrend. Let's just say that you're coming into the markets and the markets is, let me see if it'll let me replay, like right in here. You see that the markets is at a low, like a lower low. And you're trying to identify, you see that it's a downtrend, but it's not at an area that you want to sell. You know you want to sell, but it's not just because it may sell eventually. You just hit sell. What you want to do is get the most optimal point to sell. So when you have that type of scenario where you know it's a downtrend, but it's lower on the chart, like you see, like it's the lowest thing at the chart on this particular frame, you want to try to identify where your next lower high will be. Because remember, if you're selling, you don't want to sell here. You don't want to sell here. You want to sell here and here, where after you have like a pullback to give you a better price to sell from. Because if you bought something for $3, you're not going to sell it $2. You would want it to go up to $4 to $5 so you can make profit on that sale. It's the same thing with trading. So you see that you have that area. So what could be areas that could potentially form a lower high? Well, remember, trend, structure, momentum. We identified trend. Now we got to find structure. It's literally 1, 2, 3, just like that. So structure being points in the market that the market is respecting. So you see that, support, resistance, price levels. That's one form of structure. Then you have Fibonacci levels. And I like the the two zones that I pay most attention to is this 61 to 71 zone. And this 83 to 88 zone. Those are the most two zones I pay most attention to. So when you have alignment in your analysis, that's what you want to see. Now, the last thing, so basically, just based off of just these two things, and there's other things you can use without like even opening up Zeus, just to show you just basic things that you can use. You can use something like called a stochastic. And what happened is a lot of times during these, and I don't really like this area. I like to change this up a little bit. 5, 7. There we go. Actually, no. On trading view, it's backwards. There we go. So, a lot of times when you get to those lower highs, you'll see that the stochastic is at the higher point. And what I like for a sell, if you're just going off the stochastic, is you want it to be at least above the 60 point, when you're looking to sell. So that way you can identify that, hey, I got a point of structure, I got a point of confluence, meaning that you have two or more things that are lining up. And then you have just another indicator that's not based off of what you see, but just based off of just the numbers showing you that, hey, we're at a higher point in the market. You can line those things up and you can literally just trade just off of that. Like it's really that simple. What helps you as far as trading while we have Zeus is when maybe this doesn't look so simple to you at the moment. So what we like to do with Zeus, see if it'll open up. Sometimes, there we go. I don't want to update it just yet. So if I speed along, a lot of times with Zeus, it'll give you points in the market. Let me go to the 5 minute. It'll give you points in the market where it'll call out the trades for you. So you've identified, hey, we got a low here or a high here. Make sure that it'll let us. There we go. So we got a low here, or a high in this example. We don't really know exactly when to start to sell off of that lower high. Well, that's where Zeus would come in. It'll calculate a bunch of different things that'll be hard for a human to calculate, even myself, and it will look for a way higher form of alignment to find an entry. That's why Zeus is so helpful. So you have a lower high here, and it waits for like momentum confirmations to kick in and things to line up. And then once all those things are lined up, it'll give you that sell. So when you're going back on here and you got the market coming into this area, and say it starts to reject there, once that momentum starts to kick in the way you want to trade, you'll see Zeus start forming arrows in the direction of those, like off of that reaction. So the best way where you can really have a field day using Zeus is when you're able to just do a basic analysis, find a spot you want to trade from. So say you find that the market is at a lower high for a sell or a higher low for a buy, and you feel that, hey, we're getting in that area. You don't have to necessarily pick exactly when you need to press buy or sell. Once it gets to that area, you can just let Zeus do the rest, and you don't even really have to use Zeus for that, because you can use Zeus without doing any sort of naked analysis, like just marking up charts. Is what I mean by naked analysis. You could literally just go on Zeus and you're selling, right? So we want to see red candles. We want to see red lines when you sell. And the best way is I love selling right after something turned green. So for example, this sell here, you see that this line here was green and it turned back red, then the sell came in. So say I took that sell at the end of that candle, I had 10 pips of drawdown, but on a 5 minute chart, it went down 90 pips very cleanly. So even without that degree of analysis, you can trade Zeus just off of that. You can wait for something to turn green or red. So for example, let me see if I can find another one. So let me see. So here, doesn't give you the best example, but it's still a winning trade. You still would have had 30 pips off of this trade. That's a winning trade for a 5 minute trade. But that's another example. It went red. It's within trend. You see the trend is right there. It tells you what the trend is. It changes to red, changes back to green, and gives you the arrow. Simply, that's all you really have to do with Zeus, and that's it. And when the arrow is there, you want everything to be green. So you want the candle to be green, or this this blue-green here, and you want these two lines to be green. As long as those line up, you got yourself a trade. It's really that simple. That's what makes it very, very valuable. Let's see. Let's see if we could find any other. I still like this Euro Canadian, even though we had that pop up. I think there's another one due. There's another pop up due. So playing off of, this imbalance play is going. This 50 pips happened. So you can't use the imbalance as your reason to get in. So what you're looking for now is it already did bounce off of that level. So, whenever you feel like, momentum's kicking in back towards the upside, that'll be a good place to buy because you found, your trend, your structure, and you're just waiting on momentum. So you see like here, it's an uptrend, but you see how these are at the higher forms of that chart, the higher place of that chart. You don't want to just hit buy because you see that. It's an uptrend. Yeah, you want to buy. But timing, wait for it to get to a lower part. Like say if it was down here, you got this working for you right here. You got this on the lower part. All that's kind of lining up there. That's really all you have to do when it comes to your trading. Is when you're at an uptrend, find a low point. We're on a downtrend, find a high point within that downtrend. So if you keep trading simple, because really the hardest part about trading is not necessarily the entry. The entry is pretty easy. It's just just staying with your plan when you're in a trade and managing the trade. Those are what makes or break you as trading. Like I can tell you from building softwares, and you're trying to make them to where they're profitable entries or high probability entries. And when you're back testing, I could tell you that there's more edge towards success when you can manage the trade better. Like we've seen it within testing a lot of numbers and a lot of different entries, from a computer's generated testing to a manual testing, the back testing, the forward testing. That's what we've seen. Managing the trade is the most important thing. You can have the entry, but if you can't manage it, just like when you have money, you can't manage the money, you lose it. When you have a great entry, can't manage the entry, you lose. So if you're confused on, managing, what I went over here, everything that I teach is within the course that comes with getting Zeus. So you go to Zeus boot camp, it'll literally, when you get started, let's see here. Having some technical difficulties. Hold on. Where was I at? So yeah, when you get started, what you'll see, and let me go back to, you won't see it on this page, but when you go to actually access the trade room, you'll see it right here. And from there, it'll open up the course. We have about 20 different videos that'll teach you to go from being a beginning trader to being an advanced trader in a very systematic and simple way. So, with that, I would encourage you to go through that course and definitely put yourself in a position to where you can win. So with that being said, I hope that everybody got some value from this little lesson, kind of going over exactly how to use Zeus, keeping it in a very simple way. And I'll see you guys tomorrow for the New York session for our Zeus users. So y'all have a great night and be profitable. May the profits be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.